Are you interested in expanding your wealth and securing your financial future? Have you ever pondered why affluent individuals continue to amass riches while many of us struggle to build wealth? In this video, we will delve into 7 established avenues that can assist you in amassing wealth and attaining financial stability. Join me as we uncover the undisclosed strategies employed by the prosperous and discover how you too can establish a lasting legacy of financial self-sufficiency. It is a well-known fact that affluent individuals often generate more income than those with lower incomes. This is influenced by a multitude of factors. Today, we will explore 7 factors that contribute to the wealth of rich individuals. So, don't forget to subscribe to the channel and let's get started. While poor and middle-class individuals often save their money in banks, wealthy individuals prefer to invest in assets. In case you're unfamiliar, assets are possessions that generate income with minimal or no effort required from us. However, it's worth noting that in many countries, interest rates were negative in recent years. For instance, the interest rate in the USA was 1.75%, 0.75% in Switzerland, 0.6% in Denmark, 0.1% in Japan, and so forth. Central banks in these countries reduced interest rates to make borrowing money more affordable for businesses and individuals, encouraging spending and investment. They aim to foster self-reliance among the general public and promote innovation, rather than simply encouraging saving. In my view, this was a significant experiment conducted by banks, a topic we can explore in another video. However, today's focus is different. We'll be discussing the 7 asset types in which affluent individuals invest their money. Let's commence with real estate, which is one of the 7 proven assets that can aid you in building wealth and achieving financial security. You might wonder why I'm emphasizing real estate. According to Forbes, real estate holds the key to becoming a millionaire. Wealthy individuals often channel their funds into property investments through various means. The first method is property flipping. This popular real estate investment strategy involves purchasing a property below its market value, enhancing the property over a few years, and then selling it at a profit. This enhancement can entail renovating or refurbishing the property, or simply holding onto it as its value appreciates over time. The objective of property flipping is to capitalize on the difference between the purchase price and the selling price. To illustrate, consider a scenario in California where a property is deemed undesirable due to trash accumulation and a sewer issue. However, a shrewd real estate investor acquires the property at a low cost, invests a bit more to clean it up, and within a few years, sells it for a significant profit. This investor profits from the property despite a one-time investment. It's important to note that real estate dealers and investors tend to avoid this strategy, as they prefer a long-term asset utilization. Real estate investors, on the other hand, choose to retain their properties rather than selling them. This approach proves advantageous as it allows them to use the asset as a long-term source of wealth generation. Let's explore the 4 benefits of property ownership. Firstly, property ownership facilitates the use of OPM or other people's money. This concept involves creating wealth using borrowed funds, which is notably quicker in the real estate realm compared to other asset classes. Even if traditional banks decline to finance investments in company shares, they may still extend loans for real estate acquisitions. Secondly, property ownership typically leads to property appreciation. By holding onto a property, its value tends to increase over an extended period, consequently boosting your net worth and wealth. Thirdly, owning rental property brings tax benefits. Governments often grant tax deductions to property owners. For instance, if a person of considerable wealth invests in a rental property, they can avail themselves of these deductions. Lastly, property ownership can generate long-term cash flow. Investment in real estate can establish a consistent stream of rental income, which may increase annually. Furthermore, many affluent individuals utilize loans to magnify their property investments. By charging rent that surpasses loan expenses, they can derive tax advantages from the surplus income while simultaneously enhancing their net worth. Next in line is investing in shares of companies, which constitutes one of the 7 proven assets that can aid in wealth accumulation and financial security. For those familiar with investment strategies, this presents an excellent avenue for wealth accumulation. However, for those less experienced, purchasing shares can carry a degree of risk. Therefore, the pivotal question becomes, which shares should one invest in? According to Peter Lynch, a renowned investor, the average person encounters 2 to 3 investment opportunities annually that are practically within their reach. However, seizing these opportunities necessitates staying attuned to current developments and occurrences. For example, a hairdresser may discern which company's products are in high demand, while a doctor could identify crucial medications or new pharmaceuticals. Similarly, a homemaker often keeps a finger on the pulse of new products in the market and can provide valuable feedback. This awareness enables individuals to pinpoint trends in the market and subsequently explore the prospects of publicly traded companies. This doesn't mean rushing to purchase shares but rather conducting due diligence by scrutinizing financial statements, earnings, and debt to ascertain the viability of such investments. Peter Lynch maintains that many individuals do the reverse. A doctor, for instance, might invest in raw material companies rather than pharmaceuticals. This counterproductive approach overlooks industries that individuals are better equipped to comprehend, and Lynch contends that the stock market ultimately rewards patience. If you've been enjoying this video thus far and wish to see more content of this nature, please leave a comment with the word "more." The next item on our list of 7 proven assets that can contribute to wealth accumulation is licensing. While not widely practiced among the upper middle class, licensing is a valuable asset often underestimated. Licensing can serve as a potent source of income, as exemplified by Bill Gates, who receives royalties from Microsoft. This form of passive income allows for the generation of recurring revenue streams with minimal effort. Notably, even common individuals can find substantial success through licensing, as seen in the case of Stephen Key, who has amassed considerable wealth by licensing over 20 products. Stephen Key's ingenious design was sold to an organization, securing him annual payments for a decade. His success story highlights how minimal upfront investment can yield significant returns. By licensing your ideas or products, you can potentially access substantial rewards without assuming the responsibilities of ownership. Moving forward, we come to index funds, another of the 7 proven assets that can assist you in building wealth and achieving financial security. Index funds, particularly American ones, function as a type of mutual fund designed to track specific stock market indices like the S&P 500 or the Dow Jones Industrial Average. These funds offer investors access to a diverse portfolio mirroring the broader market index while maintaining low fees. This approach simplifies investing in the stock market. For instance, the S&P 500 index fund doesn't involve purchasing individual shares. Instead, it provides a stake in the 500 largest U.S. corporations. Wealthy individuals often employ index funds as a long-term investment strategy to bolster their wealth over time. Moreover, they capitalize on market downturns by injecting additional capital into the S&P 500. While middle-class investors may withdraw, effectively redistributing wealth from the middle class to the affluent. The subsequent asset class is digital assets, encompassing a range of opportunities that can aid in wealth accumulation and financial security. Digital assets take various forms, including cryptocurrency, blockchain technology, and real estate investment trusts. These avenues present smart ways to establish long-term wealth, particularly for younger generations who can exploit digital courses and products. Unlike previous generations, today's youth can develop, replicate, and distribute digital offerings with minimal production costs. Enhanced scalability has reduced the need for physical stores and streamlined expansion into different markets. Bonds constitute another of the 7 proven assets that can aid in building wealth and achieving financial security. For those unfamiliar, bonds are certificates issued by companies to lenders who extend loans. These certificates guarantee loan repayment along with interest by a specific date, rendering bonds more secure than investments in shares. Government-issued bonds, in particular, are favored for their greater security and higher interest rates compared to traditional bank savings accounts. The final asset class on our list is businesses, which also ranks among the 7 proven assets contributing to wealth accumulation and financial security. Businesses can generate substantial profits in a relatively short period. For wealthy individuals, businesses don't necessarily imply active involvement. Instead, they are viewed as assets that generate income with minimal effort. While figures like Oprah Winfrey and Elon Musk are passionate about their work and not solely driven by financial gain, the contemporary landscape allows for the purchase of established businesses through various websites. This might raise questions about the rationale for buying an online business. If you possess a substantial social media following and excel in marketing, acquiring an online business can be advantageous. You can make necessary modifications and sell the product to your audience, ultimately saving time otherwise spent on product development. In summary, I have discussed 7 proven asset classes that can contribute to wealth accumulation and financial security. Wealthy individuals utilize these strategies to invest their time and effort once, reaping long-term rewards. Real estate is a preferred choice for many millionaires due to its accessibility to loans and tax deductions. Additionally, investing in shares of successful businesses provides an opportunity for wealth creation. However, acquiring the right knowledge is crucial for sound investments. Licensing represents a method of generating income with minimal initial investment, exemplified by Stephen Key's success. Index funds offer an accessible and diversified investment option. Digital assets, ranging from cryptocurrency to digital courses, hold potential for long-term wealth creation. Bonds provide a secure and interest-yielding option for investors. Lastly, businesses, when viewed as assets, can yield substantial returns with minimal ongoing effort. These strategies collectively enable individuals to amass wealth and secure their financial future, just as the affluent have done. This video serves educational purposes exclusively and does not constitute financial advice. If you're interested in exploring additional opportunities to increase your income, I recommend watching the next video. Feel free to share this video with friends, subscribe to the channel, and share your thoughts on today's content. Thank you for watching, and I look forward to our next video.